Friends, in our previous video, we discussed Archer Aviation and Joby Aviation, the companies building the future of flying taxis. But today, we are looking at a completely different player. Now, here's the interesting part. A company that may benefit from the eVTOL revolution without manufacturing a single aircraft. That's Uber. At a first glance, that sounds counterintuitive, right? But as we will see in a moment, it may not be. And if investors focus only on aircraft companies, they might miss one of the most interesting opportunities in the entire ecosystem. Because when all is said and done, investing isn't just about identifying innovation, it's about understanding where value ultimately ends up. And today we'll explore Uber's business model, its competitive advantage, and why the biggest winner of a new industry isn't always the company creating the technology. Section 1, the California Gold Rush Lesson. Friends, whenever a new industry emerges, investors naturally focus on the builders, the inventors, the visionaries. But history tells a different story. As the saying goes, not all that glitters is gold. During the California gold rush, many gold miners struggled. Some failed, some succeeded. But one group consistently made money, the people selling picks and shovels. And that's a lesson investors have been relearning for generations. Friends, even I had made this mistake myself earlier in my investing journey. I would become fascinated by revolutionary technology. But sometimes the best business wasn't creating the technology, it was enabling it. And that's why Uber deserves attention. The company isn't trying to build an eVTOL aircraft. Instead, it may eventually become the platform connecting passengers to the aircraft. In other words, Uber may be trying to own the relationship rather than the machine. And that's a completely different business model. But here's one interesting twist. Having access to customer sounds simple, but that's only half the story. Because customer relationships can become incredibly difficult to replicate. Uber's real moat isn't transportation. Many people think Uber is a transportation company, but arguably its biggest asset is customer access. And that's a key distinction. For example, think about your own behavior. When you need a ride, what do? You open an app. The app already has your payment details, your destination, your travel history, your preferences. The hard part isn't always moving people. Sometimes the hard part is acquiring customer at scale, and Uber has spent years building that relationship. This creates an interesting possibility. Think about it this way. If flying taxis become mainstream one day, customers may not want a separate app. They may simply want another transportation option inside an app that they already use. And that's where platform business become powerful. Friends, the whole is greater than the sum of its part, not because they own everything, but because they connect everything. But real game changes from here. Because if you dig a little deeper, transportation may not be the real product anymore. It is convenience. With that, we come to our third section, from ride hailing to mobility platform. Let's think about Uber differently. Years ago, Uber was primarily associated with ride hailing. Today, the company participates across mobility, delivery, logistics, and various transportation services, including food delivery. This shift matters. Here's why that matters. Because the future transportation winner may not be the company with the best vehicle, it may be the company offering the most convenient customer experience. Because at the end of the day, most customers care about outcomes and not infrastructure. Look what happened in streaming industry. Consumer don't care who serves. They care about easy access to content. So similarly, future transportation customers may not care whether they are using a car, robotaxi, flying taxi, or autonomous shuttle. They simply want the fastest and more efficient option. And that's where the rubber meets the road. And Uber's long term strategy appears increasingly aligned with this idea. And this is the point where maximum investors fail. They focus only on the technology. But eventually, every exciting story has to face the economics. The best business isn't always the most exciting. Imagine two companies. One spends billions building an aircraft, manufacturing facilities, certification program, infrastructure. The other focuses primarily on customer demand and platform management. Which business carry more operational complexity? The answer isn't always obvious, and that's exactly what makes investing so challenging. But investors often underestimate the value of asset-light business model. The exciting story usually gets attention, but the scalable business model often creates value. The two are not always the same. But this doesn't mean Uber automatically wins. Far from it, the future remains uncertain. Data on widespread eVTOL adoption is still evolving, but it highlights an important investing principle that sometimes the most attractive opportunity sits one layer above the technology itself. And that's where devil is often in the details. So the big question investors should ask. Whenever a new industry emerges, most investors ask who invented it. A better question might be who captures the highest margin and scalability in the value chain. It may sound like a small distinction, but it's incredibly important. Think about smartphones. Many companies build devices, but value accumulated in different parts of the ecosystem. Think about e-commerce. Many retailers participated, but platform business became incredibly powerful. The same question applies to eVTOL. Will value primarily belong to aircraft manufacturers, operators, infrastructure provider, or software platforms? Or the value belongs to a combination of all four? And that's the $1 million question. That's why studying Uber alongside Archer and Joby becomes so interesting because they are solving different part of the same future, different strategies, different risks, and different opportunities. So at the end, let's connect the dots. So what can we learn from Uber? First, the biggest winner of a new industry isn't always the inventor. Second, customer access can be just as valuable as technology. And third, investors should focus on who captures the value, not who just creates the innovation. Because creating value and capturing value are not always the same thing. If there is one takeaway from today's discussion, it's this that history often rewards the companies that connect ecosystem, not just the company that builds them. And time will tell whether eVTOL follows the same path. Now, I would love to hear your thoughts. If flying taxis become mainstream one day, who do you think ends up with the strongest position? Archer, Joby, or Uber? Comment below. And in the next part of this series, we will discuss another critical piece of the puzzle autonomous driving and robotaxis. Because the future of transportation isn't only happening in the sky, it's also happening on roads. Thank you for watching and see you in the next one.